Good evening, everyone. Welcome to today's webinar organized by Algorithm. It is on a very interesting topic, how to build credit as an immigrant. I am Tasnova Chaudhary. I'm the webinar coordinator, and here is my colleague, Dean, the communication manager at Algorithm. We'll be responsible for hosting the presentation today, and we are happy to welcome our speaker, Sergio Torres, co-founder and CEO of Alvva. Alvva is a financial technology company whose mission is to help US immigrants achieve financial health. Our speaker, Sergio Torres, has spent 15 years working to serve the financial needs of immigrants and underserved communities in innovative and tech-driven ways. As promised, our webinar will be very interactive and full of fun. For that purpose, we have some poll questions, and you'll see those during the webinar. And please select your response accordingly. Now, my colleague Dean will provide more details about the question answer session.
All right. Thank you so much, Tasnuva. So during the entire session, you might have some questions. So there are two ways that you can go about this. The first way is to write directly in the chat, and either me or Tasnuva will ask Sergio during his presentation. Otherwise, you can also save all of your questions for the end of the webinar, where there will be an open Q&A with Sergio. And just to make sure that everything runs smoothly, please refrain from turning on your mic and asking him directly. We would like to have this as streamlined as possible so that everyone can get a little bit of something from Sergio. But without further ado, I would like to pass it on to our main speaker, Sergio.
Hey guys, nice to see you. This is a chat that I'm going to give to you guys of something that I'm very passionate about. I myself moved from Mexico, and seeing some of the comments that you guys are posting, how it's not friendly, it's tough. Like, it was very tough for me, and I'll share a little bit more about my story. But you guys are here. I think that's one step that you should be proud of. Either you're doing a PhD study or you're looking for a job, but you're here, and that's a great first step. And continue trusting in yourselves that you'll go on to achieve great things. And working with the folks at Algorithm, I'm sure will be very helpful in leveraging the community that they built. So a pleasure to be with you guys. And what we'll be talking about today is how to build credit as an immigrant. So I'll get started really quickly with an introduction. I think the team gave that introduction, but originally I grew up in Mexico. I only moved to the US when I was about 25, 26 years old. And I encountered some of the issues that you guys are facing. I couldn't get a job. And actually, my first job was selling auto insurance for $12 an hour in San Diego. I thought that, being able to speak English and communicate well, and having a university degree from a prestigious school in Mexico, and even being a citizen, like I was born in the United States, even though I grew up in Mexico, that, at least I was going to be able to find an entry-level job. But I couldn't. I just kept on applying and kept on getting rejected. And, finally, I just had to bet on myself and, get a job, like I said, selling auto insurance. So I wish Algorithm was around, 10, 15 years ago. That probably would have been helpful for me to land a better job. But, that was my path. And, obviously I'm where I'm at right now, and there's still a lot of work to do to continue to pursue my dreams and help others. But, don't be demotivated by, sort of what's going on right now. But, I just decided to move to the US, probably like you guys, because, I just wanted to to bet on myself and sort of pursue this dream that you can build whatever you want if you work hard. You also need luck. You probably know that or will find out. But yeah, one of the interesting things that happened is that, you know, I was employed and I needed access to credit. I needed to buy a car. I needed to rent an apartment and all these things. And I quickly found out about the fact that, you know, you needed credit to get credit, which was so confusing, right? It's like, well, but then how do you start credit, right? And I think the first, you know, sort of interaction that I had with this, you know, sort of system that's in the United States is that I needed a cell phone, right? It's like you need a cell phone. So I went to Sprint or you know, I can't even remember. I think it was Sprint, and they said, hey, you can get, you know, you can get the smartphone. It was probably a BlackBerry phone, no judging, but it was probably a BlackBerry phone. And they said, you know, hey, you know, you can get it for no money down and then just pay us like, you know, I don't know, like, you know, $80 a month. So then when they were doing like, they were getting my information, they said, well, actually, you know, we see that you don't have any credit, so you're gonna have to give us $150 deposit. I'm like, damn, like I see, like that's not great. Then I wasn't ready, but you know, I had the money. That those $150 are better in my pocket than at Sprint, or you know, Nextel or whatnot. But that was like sort of like my first exposure with this system. Uh, you know, I wanted to get a loan to start buying some furniture. And I got rejected. And you know, when I was talking to the person within my bank, so I had opened a bank account, they said, well, you know, you can build credit by going to Macy's. I don't know where you guys are at. Macy's is this like department store where you can buy like clothes and shoes and whatnot. They say, you know, they'll give a like a credit card to anyone there. So I went there and I applied and I got rejected. So I'm like, what the hell do I need to do? I talked to the bank and then they said that you can actually get a prepaid, a secured credit card. So how that works is like a traditional credit card, but they give you a balance of say like $300 or $500, but you need to deposit that money into sort of a bank account. So you're basically using your own money to lend to yourself. I'm like, I don't want to do that. In hindsight, maybe that was a good move, but ultimately because I needed a car, and because when you're buying a car, you know, they can always take the car away if you don't make payments. So car dealers are very flexible with that. Obviously the drawback is that because I didn't have credit, I think my interest rate was like super high. But that's how I started my credit journey. And you know, then I got access to open a credit card and personal loans, etc., which have been helpful because sometimes, you know, you might lose a job or you might need to buy something which you'd rather like get credit for. But that's my story, and there's been a lot of innovation that's happened, you know, since then till now. A lot of fintech startups that have really, you know, been founded to solve this problem, which, you know, I faced and you guys are facing. So I want to take you there to see how different startups have addressed this big problem. But before I go there, I want to learn a little bit more about you guys, and I want to give you more information about like how the system is set up. Okay. So first question is, do you guys have a credit score? And you can individually, Tisnuva, if you can set off this first.
Yeah,
This
I'm
first
launching
survey,
the
that'd be
poll.
great. Yeah. So if you can answer on the poll, that'd be great. Oh, I need to answer, right? Okay, I'll answer yes, so I could see it. Have we gotten any, are we able to tell in real time what?
So, yeah. So I can see that 86% of them said yes and
Okay.
14% said no. Yeah.
Okay. Well, that's great. I saw some of you guys have been here for 8 months. You guys are doing quick work. There you go. Awesome. My second question is, in your country of origin, is there a credit scoring system that is like universally used and accepted? So can we launch that question, please?
So,
All right, so we're just waiting on folks to answer.
yeah. Okay, I'll share the further line. Share here.
No, isn't that crazy? Like, what is the what is the United States think that they're so special, and they created this like scoring system for everyone? But I'm from Mexico, like I said, and there is a credit bureau, but you don't want to be on the credit bureau. The only reason why you're in the credit bureau is because you haven't paid sort of your obligations, or you took out a loan and you didn't pay. So it's like it was this binary thing where if you're in the credit bureau, that was not good. If you weren't in the credit bureau, then you were okay. But that's helpful for me to learn about like your situation. So what is a credit score? So credit score tells lenders about your credit worthiness, which is like how likely you are to pay back a loan based on your credit history. So if you think of, how everything works, especially back in the day, there's this company called FICO, which is it stands for Fair Isaac Credit. FICO, it's called the Fair Isaac, Credit Company, I believe. Sorry, Fair Isaac and Company. That's what it stands for. They're the ones who said, there's so many ways how different like banks and financial institutions assess risk. Why don't we build this scoring system that then everyone can use to make underwriting decisions, right? And then they could just say, well, if you've got more than a 700, then I would approve you for a loan. If you don't have any score, well, I'm not going to approve you for a loan. So basically bucket people into categories. And over time, all these financial institutions started leveraging the scoring system. Now, obviously, it's great. It's helpful. It's this like universal tool that is used by a lot of people. But was built in a certain way, and it is blind. It is blind in some ways, right? So say if you've never had access to credit to banks, it says, your credit invisible. I don't know who you are, and I'm not going to lend to you. But in practical terms, just because you haven't had access to credit doesn't mean you're not responsible and that you're not going to pay your debts. So obviously, it leaves some things to be desired, but this is what a credit score is. And why is a credit score important, right? If you have good credit, it can give you access to a lot of opportunities. It can make your life easier, and you can save thousands of dollars in the long run. So making your life easier, renting an apartment, something as simple as that. Some landlords will not rent to you if you don't have a credit score. Or if you have a low credit score, no credit score, they might rent to you, but they might ask for a security deposit that is, twice as much as if you had good credit. Some jobs, check your credit history. So when we think about that, it just like makes your life easier. And if you think of my examples, like, paying a down payment for a phone, right? It's just money that you get to keep. And especially important when you're making big purchases, when you're buying a car, when you're buying a home, etc. This is super important because we're talking about saving tens of thousands of dollars in the long run. And I'm going to show you a difference an example, sorry, of how this matters. And then, the second point here is that it gives you just a lot of options, right? You never know what life is going to bring you. If you're going to lose a job, if you're going to have an emergency, if you're going to have an accident, you want to start a business. When I started my business, banks, like, I had no information about the business. They wanted to know about me. When I started lending in California, they didn't want to know about Alvva. They wanted to check my personal credit score, and they wanted to check my tax returns, so they can issue me a bond so I can get licensed in California. So having a credit score just opens up, one second, so many doors for you. So here's an example of buying a vehicle that is worth $20,000, and you could see how the cost of purchasing this vehicle, if you finance it, varies so much depending on whether you have a strong or a weak credit score. So you're still buying something that's worth $20,000. But if you have strong credit score, say a 720, you might get an interest rate that's a little under 4%. Your monthly payments are $451. Your finance cost ends up being about $1,600, which is the amount of interest that you pay over the life of the loan. If you were to have a weak credit score, which is a 590, your interest rate is going to be higher. Your monthly payments are going to be higher. So just think, that's like $110 every single month that is sort of escaping your wallet or your bank account. And the total cost is $6,800. The difference between both is about $5,200. So for buying the same vehicle, or the exact same purchase that you're making, you're going to end up spending a whole lot of money. And I don't know if you guys have seen, I think Adina did a webinar with you guys, Adina Applebaum from Immigrant Finance, and she was talking about investing. It'd be interesting to see if those $110, instead of paying interest, you were to invest that money on the stock market or save up to buy, a home, how that sort of accelerates, your path, to create wealth for yourself and for your family. So there are 5 factors to create, to calculate a credit score. And the 5 factors are new credit. And this is in no particular order. We'll do an exercise now about which ones are more important in this calculation. It's not, these 5 factors, they're not all weighed in equally. Like, it's not like they're all worth 20%. But the first one is how much of new credit do you have, right? So think of, you might have a credit history for 2 years, and then suddenly the credit bureaus saw that you got 3 loans with 3 different lenders. They're not going to see that favorably because they might think that you're in a difficult situation, and they're going to lower your credit score for that reason. So whenever you are accessing credit, just keep that in mind. If you're in a good situation, then you're not going to have to do that. But that's something that's weighed by the credit bureaus. The second is your payment history. So when you take out a loan, are you making your payments on time? Do you go delinquent? Do you go delinquent 30 days? Do you go delinquent 60 days? Do you go delinquent 90 days? This is the second factor, which is the payment history. The third one is types of credit. So they want to see the 2 main types of credit are installment loans. So you get, say, it could be a personal loan, it could be a mortgage. You get some capital, and then you pay in equal installments month over month, and then you've got a payment plan. Once you're done, that loan is closed. The second one are revolving accounts, which the typical, the most common product there are credit cards, which you can add on purchases, and then you pay over time. You can make a minimum payment, but it's revolving, right? It doesn't close that account unless you pay it off and you want to close it. But we'll talk about this. Don't close your credit cards, even though they're at no balance, or your loans. Keep them open. This is important. This is important because of the next point, which is the length of credit. So obviously, if you've got 5 years of good credit history versus 1 year, that's going to make yourself, obviously seem like a better risk. And there's a larger sample size for your repayment behavior. So if you've got 8 months of credit history, 1 year, like you can only go up so much. Sometimes, like even if you've got different types of accounts and you're paying all the repayments on time, sometimes you just need to keep that going over a few years, so you can really get to the topper like echelon and really build exceptional credit. And then finally, amounts owed, which is like how much money you owe in your outstanding credit. And the important calculation here is, for example, if you've got a credit card with a balance of $10,000 and you use $9,000 of that, which is 90%, that's going to reflect negatively on you and your situation. You're over leveraging on credit. So really, when you get a credit card, you don't want to use it too much. Keep it within the 10-20% range. Ideally, you want to pay it off every single month. That way, you're not paying on interest. But life happens, and you might need to make a large purchase. Maybe buy a bike to get around, something along those lines. But these are the 5 ways how credit scores are calculated. So now we'll get into a fun little exercise about how I need you guys to guess, right? So there is the single most important factor out of these 5, which accounts for 35%, so a third of your credit score. And Tas, if you could launch the first question, and you guys need to guess, no cheating, no looking it up. Guess which one is the most important in calculating your credit score. So think if you were a lender or you were lending them money and you could only see one of these things, which one would you choose? So Taz, will whenever we're ready.
Yeah. I'm sharing the result. Yeah.
All right, payment history 71%. We got length of credit 14% and amounts owed 14%. If I'm doing my math correctly, I think we've got 6 people answering, or is it 7?
7.
It's 7. It's 7. Okay. Cool. Well, 5 of you were right. It is payment history. That's the most important factor. And this accounts again for 35%. So now there you go. Boom. Congrats. The second most important factor accounts for 30%. So if you think of like these two, make up for 2/3 of your credit score. So now we're down to 4 factors, and we got to choose which one is the second most important. Let's launch it. To be honest, I don't even remember. Let's see. I could be wrong. That would be very embarrassing.
5 out of 7. We want everyone to participate.
Yeah, we're waiting for 2 more.
Yeah, everyone is thinking.
Yeah. It gets hard.
Perfect. So let's hear the result.
All right, length of credit 57% and amounts owed 43%. So the second most important is amounts owed, which four of you guys, was it four or three? Yeah, three of you guys got. So good job for these counter thinkers. Now we'll go to the third one, which is a little bit less, 15%. And we'll do a final poll question. That way you guys really understand what the most important factors are. So let's launch the final question here. Is it new credit, types of credit, length of credit? I think we'll get 100% here.
Yes, looks like that.
Let's see.
Okay. The last person, we are waiting for the last person. Okay. And the poll, sure.
Yeah, there you go. Cool. And then we've got 20% left over for new credit and types of credit. Cool, thank you. Thank you for participating there. So this is the FICO credit score range, and it goes anywhere from 300 to 850. Really, if you're in the poor category, it means that you haven't been responsible. When you're building credit, typically the first score that you get is around 600. 580 and 669. You've got access to credit, and maybe there's some things that are shaky there. It's like very new. Maybe you're like getting access to a lot of credit. But typically as you start, you get into like the good category. And going from good to very good and then exceptional is exceptionally hard. It takes time, and it's frustrating because you could say, you know, I'm responsible, I have a good job, I don't have a lot of debt, but you know, I can't get to like a 700 or 750 or an 800, which I think it took me like 10 years to get to an 800. I thought that was ridiculous, but it is what it is. I think you can get there faster. Now, like, why do you want to do that? Obviously, for the reasons that I just said. You know, if you want to buy a home, if you want to like sort of graduate on your like financial journey, I think buying a home is the most important thing. But you know, if you're buying like as simple as a car, right? We just bought a car 2 years ago. Sorry, me and my wife, who's not here, but anyways, and we got 0% interest on a new car. So that was great. And if you compare that with even like 2 or 3%, we're still talking about thousands of dollars that we saved up. So it's like super helpful to have good credit. Now, what are the ways to establish a credit score? And this is now, I want you to think this is like the old school way. So if you go on to these Experian and like FICO websites, they're gonna tell you to do this, which I wanted to show this because I want you guys to think and compare with like the solutions that are out there nowadays. And you know, I'd love to get your feedback. But originally, there's this thing called a credit builder loan, and you sort of it almost works like a secured credit card, but you put some money, you start putting some money into savings, into a savings account, and you're making those payments. Actually, how it works, the bank puts some money in your in a savings account, and then you start making some payments towards that savings account, and then once you're done, they give you all that money back. You know, I know it doesn't sound like very helpful, but you know, secured credit card, that's the same way. But it's just with a credit card, you put that money in, and then you start using that money for purchases. And then the final one are the retail store cards. This is like typically what people used to tell you, you know, 10, 20 years ago. But like I said, the world's changed a lot with technology and innovation. But before we get into that, I'll quickly give you some tips about improving your credit score. And I think most of you, except for one or two people, already have a credit score. But this is obvious. Pay your bills on time every single time. Auto pay is very simple. It works. You don't have to worry about anything. So if you have that opportunity, go ahead and do that. Check your credit report and make sure that it has no mistakes. And I'll show you something as to why you want to do that. Reduce the amount of debt that you owe. And this is tying back into what I had said before. But if you've got a high balance on your credit card, try not to spend too much and just focus on repaying that. Only apply for the credit that you need. Don't use more than 30% of your total credit limit. If you have a credit card, ideally pay your entire balance every month. If you've missed any payments, just make them and stay current. And then finally, never close your accounts. Because if you close your account, remember, in credit scoring, they average out, say, like you got a loan 5 years ago, you got a credit card 4 years ago, and then you just got another loan, like say last year. So they'll average that 5, 4, and 1, 10 divided by 3. Your average account is like 3 years. Say if you were to close your credit card that you had for 4 years because you're not using it, then you're gonna have a loans for 5 years and something that you just got from 1 year. So your average is gonna go from 3 1/3 to 2, right? Or yeah, it's kind of lower. I don't know if I'm doing the math right, but you got the idea. So never close your account, especially the revolving ones. So, fintech is changing the game here with credit scoring, and there's been a lot of companies which I'm sure I'm missing out on a lot, but these are like the main ones that are out there that really help people get access to credit if they've had no credit or build a credit score. And they've done it in innovative ways. Leveraging again technology to do this. And these are 5 different categories. So we'll start off with sort of the smart credit builder bucket, which is like finding interesting ways to report payments to the credit bureaus. You could see some of these companies like Kickoff, Kovo, Susu, and Altro. Kickoff and Kovo are sort of a subcategory within this bucket, because what they do is, much like a credit card, they allow you to purchase something within their company. And what these guys do is they offer you like access to credit building materials or to courses, right? And say they charge you $50 for that. And then you start making those payments in installments. But what that does is, obviously they're reporting those payments to the credit bureaus, and then you're also using a portion of the amount that they approved you for. So like, for example, Kickoff, they approve you for $500, but then you're only buying $20 or $25, which is I believe 5% of the amount that you're approved for. So that's really helpful when you think of the amount of money that you're borrowing. Asusu reports rent payments, so that helps you as you're making rent payments. And then Altro has a very interesting model that we used to call it Perch Credit. But if you look at your bank account, like for example, mine, I see payments going to Amazon Prime, going to Netflix, going to Spotify, etc. And what these guys said is like, hey, if you're paying that every single month, like we could report that to the credit bureaus, and they can help you build credit. So and here's like the kicker, what they do is they deposit your money to pay these services. right? So they like, maybe like you need $30 for these services. They deposit you the money, and then at a certain point, they sort of deduct that from the bank account. So they are lending you the money, and then you are paying them back. But it's a great opportunity for you to build credit, and it's free. It's free for you. So this is one bucket. The second bucket is these companies that said, you know what, FICO is not perfect, especially for people that just moved to the US. There must be a better way to say if to determine if someone is responsible and is able to pay back a loan. So what these companies have done is they've leveraged alternative data, probably from applications. So Opportune focuses mostly on working class immigrants, blue collar immigrants, and then still focuses a lot on the people who come to the U.S. to study and are here on a visa, on a student visa, or an employment visa. So you could come from Bangladesh and be responsible over there, but once you move here, like you're new, you're a ghost. But these companies have sort of bridged the gap there and have given people who don't have any credit access to credit without having a credit score. The second one, the third bucket is the save to build credit category, which is very similar to this, to what older banks were doing. But what they do is they deposit some money in a bank account, and you're making payments towards that amount. And then once you're all done, you can retrieve the money. But it's tech driven, it's super seamless. The application is super fast, and you can always like opt out of it, or you can continue doing it. You can also select the amount that you want to do. You could start, with like $25, but if you want to save more money, you can do that as well. And what these both companies are doing as well is they might do that, but then also give you some more money, right? So they might say, I'm going to put $500 or $1,000 in an account, and then I'm going to give you $1,000. So your loan is for $2,000, but you get half of it. And then once you're done paying, you get those $1,000 that were locked into your bank account as well. The fourth one are credit building debit cards, and Pedal is a credit card, but especially Tomo and Extra, it's a debit card. But what they do is it's a debit card you buy every single week from it, and then at the end of the week they deduct the money that you spent from your checking account. So that's a popular model. It's sort of American Express, but shortened to 1 week, and they're reporting those payments to their credit bureaus. Chime has a credit builder, and then Pedal, that's more like a credit card. Really, I should create a separate bucket. I think it's month by month, and you're also able to build credit through them. And then, I'll shameless plug, but I'll put us into, sort of this fifth category. But a lot of people are eligible as they're going through the immigration system for different forms. And, it could be changing to a different like employer based form, or you could adjust your status and get permanent residence and get a green card. And then, you might get citizenship. And then you might say, what, I want my parents to move to the United States, and I want to get a green card for them. So a lot of people that are immigrants don't have access to credit. So what we're doing is, we lend them the money to pay for these expenses. It could be the government fees, but also the legal assistance fees. And then they pay us back over time, and we report those payments to the credit bureaus. How are we on time? 6:14. I'll go quickly, but this is the complete framework. Now, looking back, like you guys have credit, but I'd say like what I do, like if I had everything that's available out there, number one, open a bank account. You need that to live and survive and to put your money in there. The second thing that I would do is I would go to like Tomo or Extra and get one of these credit building debit cards. And then finally go to Kickoff, or go to the smart builder, credit builder companies, and get an account through them. So with two bank accounts, with these two products, I think you'll be able to get at least a 600, 650. Number one, without paying too much for it, right? There's no fees, like you're not getting a loan and paying interest. These products are basically free, like how Tomo, how these companies make money is through the interchange. So every time you swipe, your card, they get 1 to 2% of what you're buying. But that's coming at the expense of the merchant, right? So if you go to Starbucks and get a $2 coffee, these companies get 2 cents, 5 cents, whatever. But that's not coming from you, that's coming from Starbucks. So it's smart to do it that way. And I wanted to show, I put this quickly together because my brother just moved to the United States and he got a card through one of these companies. And within less than 6 months, he was able to get a 632, which is great. I think that's amazing. I'm so jealous that I wasn't able to do this. So we greatly recommend that. And then it's also important to sign up for a credit reporting system. He does it through his bank, but he got this notification last week that he had gotten a new account for a personal loan in Arizona for like $34,000. He was panicking, he was fainting. He called the credit bureau and they said, oh, sorry, it wasn't you, let us change this. So make sure you're monitoring. The credit bureaus are not perfect. No one's perfect, nothing's perfect. So yeah, make sure you do that. And then, yeah, so, this is the end of the content that, sharing with you guys. But if you guys, well, I'll kick it over to you, Tass and Dean Tisnuva, if you guys want to open a Q&A or whatever.
What a wonderful presentation with valuable information. I learned a lot and I'm hoping everyone did the same. And now we have some questions and I hope Sergio will answer those questions. And thank you so much, Sergio, for the beautiful presentation.
Yeah.
Sure.
Yeah, it was super, super informative. So our first question comes from Rafat. So he's asking if someone is on F2 visa and has ITIN, but no SSN, then can he or she get credit score by applying for a credit card?
So if you're able to get a credit card with a 19, then yes. So one of the big myths out there is that you need a social security number to build credit. You actually don't. How the credit bureaus operate is they just need to build an identity of a person. So that person could be, let's just go with Dean, and Dean, was born, let's just say the 1st of January of 1990, and he lives at 120 Main Street in Los Angeles, California. So that's enough for the credit bureaus to say, you've got an identity. You're Dean who lives at this address, who was born at this. You might have an ITIN, right? You might not have a credit score at all. An ITIN or social security number, but you can build a credit score. Now, these credit companies might have a policy where they might require a social security number. But a lot of the ones that I mentioned do not require a social security number. And then you can enter your ITIN. I think the key is getting a bank account with your ITIN. And from there, just checking with these options that I presented. And I can share, Tasnuva, I can share the deck so you can share it with the folks that were part of the presentation and with the broader community if you want. And you can take a look at these options, right?
Perfect. Yeah.
All right, that's perfect. And the second question we had during your session was from Kabir, and he was asking which bank account or card is recommended to start a credit card.
Yeah. So I wouldn't recommend any of them because I haven't used them personally, but I would start off with the ones that I mentioned, where once you have a bank account and you can get this card to start making purchases and then getting that money, the money to pay those expenses on a weekly basis from your bank account, then I would definitely recommend any of them. Ultimately, like, there's no cost for these services. I would look at their website, see which one looks more, friendly to you, and then go from there. If it doesn't work out, you can close it and get another one. Like, I wouldn't close it. Sorry, I wouldn't close it. I would just stop using it and then open up another one. That way, it doesn't ding you. But then keep on monitoring your credit score. Yeah.
Okay, all right. And then a question from Naveed. So they were asking, is credit card APR negotiable? And what is a credit card hardship program?
Yeah, I'm not sure if it's negotiable per se, but as your credit score increases, I think you can reach back out to your credit card company and see if they could change your APR. And I think that's something that's common, and I would recommend when you're buying something like a vehicle, definitely. Especially, like, don't be if you need a car, like, don't be afraid to get into it and finance that car for high interest. Once you get a credit score, you can always refinance, or you can get it through a different vendor. So I got it through a credit. I got my first car. I paid 12% APR, which is, like, for a car, it's like high, even though it's through a credit union. But after a year or two, I refinanced through Capital One, and I got an interest rate within single digits, so my payment lowered. And I'll just leave it at that. But yes, go and do that. If you got a credit score, you continue building credit, negotiate.
Okay, sounds good. All right, so we've got about 4 minutes, so be sure to send in some more questions. I think we'll accept about 3 more, but we do have one question here from Meme, and she is asking, I've got a Chase Freedom card a month ago, so can I apply for an Amex card next month? So that's the first question. And the second part is, what's the probability of getting one, and what's going to be its impact on my credit score? And she would like you to note that she's discovered that her Chase credit card already, but they have a very low.
I think she has a Discover and Chase credit card already, and they
So
have a very low credit limit. Yeah.
Yeah. So what should she do?
Yeah, and I realized that I missed the second question from Navid, but we can go back to that. I would recommend, if you're interested in building credit, and everyone's situation is different. Like, I don't have, like, access to a calculator. I would say I would just stay with those two cards that you have, and see how everything evolves. Chase actually is great if you're interested in getting a higher balance. Chase will find every single way to get you into a higher balance. So as you make payments, they're going to say, hey, you're higher for a higher balance. Would you like to do that? Also, if your income changes, if you get a job, right, or you get a higher paying job, you can always call them and update what your income is, because that might factor into the decisioning that they have. So I would probably not do an Amex card yet. I would wait to see, maybe a few months, but it's all like, what's your personal situation is, and what are you looking to get out from this card, right? Think practically, like, what do you need, right? Do you need more access to funds? Maybe you don't need a credit card. Maybe you need to get a personal loan, right? Pay off some debts or whatnot. So I mean, there's a lot. I'm not a financial coach, but just with the information that you shared, I would probably wait a bit and see how things evolve with the cards that you have right now.
Okay, all right. And
There's
just
another
to
question.
finish Oh, so just to finish off Naveed's question before we get to that one,
Yeah.
he also asked, what is a credit card hardship program?
Yeah, so I mean, this is a great question, but especially with COVID, a lot of people lost their jobs and they weren't able to pay their debts. So a lot of the credit card companies and personal loan companies actually created hardship plans for this situation. Really, it's not that people don't want to pay off their debts, but something happened, in their lives or in a lot of people's lives, like COVID, that they lost their jobs and they can't pay their debt back. So they create a program where someone's paying, a small percentage of their payments or just interest. Um, and they do that over 3 to 6 months. Typically, each company does it different. But if you're in a bad situation or something happened and there's, these programs available to you, I would say, take good advantage of them and use them, right? Like, because you have cash on your hands, maybe from savings. I think I'd rather be conservative and keep that money and then take advantage of those hardship programs.
Okay, all right. I hope that answered your question, Naveed. And our last question for today is, if someone does not have a social security number, then how can he or she monitor the credit score?
That is a great question. I think you could still do it through your bank. I think Chase, like you could do it through Chase. I would try doing Credit Karma, some of these credit monitoring apps. I'm not sure if they will require a social security number, but I would bet on your bank app. I think there could be something to monitor your credit, and they already have your information, so you're sort of in the system, and it should be easier for them. So that would be my suggestion.
Perfect. So I think we're done with the question and answer session. And thank you, Sergio, for answering the questions. And we missed that Mejabin actually thanked you. You helped to take a decision. And I know, like me, all of you really want to re-watch this video, right? So don't you worry, because we will be sending this video link to you all, and also the document that Sergio gonna or like share with us. And yeah, and also like we'll be like sending evaluation feedback form, and it will be very helpful if you take that evaluation form, and it will take, I think, 5 or 6 minutes. So Dean, do you want to say anything?
Good.
Yeah, so we'll get you all the info that you need. But of course, always feel free to reach out to us again. And thank you again, Sergio, for this webinar. It was very helpful, very interesting. And yeah, of course, check out Alvva as well. Helpless plug.
Yeah. I mean, follow us on LinkedIn. I think that would be helpful. If you feel connected to what we're doing, you were at an early stage, but we hope to really help people out and grow. So yeah, let's stay in touch through LinkedIn. Anyways, yeah, thank you guys for spending this afternoon with us, and I wish you all success. I think you guys are going to do great.